Okay, good morning. It's Jonathan Barrett with the morning report. Current time is 8:30. That's the morning report for Wednesday, the 9th of December. And obviously there, just checking all the screens, make sure they're all right. And they look good, and everyone can see them. That's fantastic. Okay, I guess the major news last night, obviously Bernanke the night before, so let's just move that out of the way. But the major news over the last night particularly was we've seen a continuation of trend. That's a continuation of trend from the theme we discussed a little while ago. Dubai World's losses, Greece is on credit ratings, and that should also lead into what's happening there in Hungary as well. So that to me remains quite a concern for exactly what could occur. And as a result of all this, we saw the US dollar actually rally again, and this remains, in my mind, very positive for the suggested trades which we've had on for a little while. Okay, let's just quickly go through the markets. Give us a little bit of a snapshot as to what did occur last night. The Dow was down 104 points. Dow down close to 10,285. S&P was down 11 points at 1,091. The Nasdaq down 16 points at 2,172. Over in Europe, things were just as negative. The FTSE was also down, and the Stoics 50 closed down 47. The FTSE was down 87, and the DAX was down 96, and the CAC 54. So all relatively negative across the board there. The local market looks like that's also closing down quite weak. Closing week. That's closing at 4,614, and that's down 1.16% last night. Just having a look here, that is the SPY. That is the daily SPY. That's where it is at the moment, and as we can see, it's looking relatively precarious, and actually feels that it can actually come close to trading, close to some of these trendline supports. That's one there. We've got at 4,400, and if we take out low last night, around that 4,600 or 4,585, then we could see a fall down to these levels. So it could be quite interesting there as to what does occur leading into it. But as we said, everything seems to be relatively negative there. If we have a quick look at the S&P and the equity markets there, and as you can see, that is looking quite heady. One thing I do want to note here is there is a feeling of divergence appearing. See here, and you see here. Basically, the markets move sideways, yet momentum's pointing down. This will give us a bit of a clue that equity markets will come under pressure. And I'm quite happy being short equity markets with a stop above that level, and that high is 1,119, and I'm sort of quite feeling that, and stop up around there, well, I'm going to be wrong, so I'm quite happy to take my medicine. But having said that, I think we're going to be a little bit of a correction, and this certainly points the way to give us a bit of a clue that things will come under pressure from here on in. So it looks like that Christmas rally we had might not actually materialise. Now, why do we think this is going to occur? Well, I'm not going to run through all the bits and pieces, but I will give a quick summary once I finish the overview last night, and then we can move into some trades which we're looking at. Just so you know, the US dollar last night did firm, broke through that area, particularly on the dollar index, and or particularly on the euro as well. It broke through some very critical stuff, and then she turned around and she's dropped. Euro dropped about 119 points. The Aussie dropped pretty much close to 77 cents, and the dollar switched up about 72. So quite movement there. There's that trend. It looks like it's continuing. Just to reiterate, once again, look at that movement there. It sort of once again goes to show to me that things remain very positive in terms of how we're going. Correction, yes, this is a correction that's underway. Broken that trend from here. It's a 6-month trend change, and as long as it stays above these lines, then we can conclude that things look okay. Now, we need to see some impetus to see that move onwards. It does appear that the US dollar is getting traction as a safe haven currency, believe it or not. That's the way the market is working. Moving quickly on to our general commodities, and that certainly did move and shake a few things. And in my mind, it's that moving and shaking which is going to give us direction for next year. Brent crude was down 1.7%. West Texas crude was down 1.85%. Natural gas still showing the light, up 2.27%. At one stage it was up around about 3%. Agriculturals, wheat was under pressure by 1.5%, soybeans up just under 1%, cotton down 0.64%, and cocoa down 0.47 at 3362. Copper, something we've focused on for some time, still under pressure as well. Copper down 1.68%, and that indicates to me that things remain relatively weak in that spectrum. Gold had a shocker overnight. Gold was actually down $33. We all exited all our gold positions probably about 2-3 days ago. I still think that remains the play at the moment. And as I've mentioned before in countless articles, that I feel this is something similar to what we saw in oil when we went from 110 to 140. And I think given what's out there at the moment, I think that you might see people converting things to cash. So if anything here, gold has to do a lot of work in order to get aggressive to the top side. It can still do that, there's no doubt about it, but our opinion stays bearish until 1170 is broken on the top side. Okay, and even with 177's broken, we're only going to see it sort of travel back to the top. So yes, I think there's a high there in place for gold for the time being. Okay, quick look at copper, and copper is one which is certainly showing the fruits of a lot of stress we've had and a lot of labour. It just doesn't. It shows that it's still under pressure, and as we can see here, that's the chart for it. Fundamentals are all the same. She hasn't broken through, and we're testing this support level now. So if we break through this support here, then we can see that she will come to the next level, which is down around that 300, maybe even lower. A break from this 300, in my mind, suggests that it can go quite significantly lower, and target of 250 is a real possibility. Why are we now leaning towards this? Well, it's something we've talked about for some time. There are a couple of reasons why Bernanke came out and said, why he came out and just finishing a report here, so that'll go out to everyone. Why did he turn around and he say, well, look, on one hand, he sees a moderate recovery void of inflation, then on the other hand, an economy is facing formidable headwinds. And as a result of this, credit will remain tight and the labour market weak, unquote. We suspect there's a red herring there, that the chair of the Federal Reserve knows something he's not going to talk to us about. Now, why will commodity markets come under pressure? Well, the US dollar will firm. That might firm by itself as a safe haven. But there are a couple of crucial things which we've talked about before, and I'll just quickly run through them. The first concern, obviously we've mentioned US dollar safe haven. But why is it a safe haven? Well, at the moment we've got Dubai World, which is an issue. We've got Greece, which is an issue, and we've got Hungary, which is an issue. This will all create concern and the potential for more exposure to banks. And this is one reason why banks are keeping the credit rate low, or the Federal Reserves are keeping interest rates low, because of the knock-on effect that could happen as a result of this. The other reason is that while interest rates will remain low, is purely as a consequence of not what's happening in the property sector over in Greece, Hungary, or Dubai, but what's happening with the US property market. US property market, the commercial property market, is something that we have a big problem with, and if there's any hiccup in those areas, then you've got further loans that the banks are all trying to provision for, and I think that to me is one of the major concerns there. And finally, we've got inventory builds in all our primary inputs, and oil, copper, everything you name. At the moment, we're seeing inventory builds across the board, and that is basically saying to me that these stimulus packages which are rolling off aren't actually coming to fruition. They're going to have to do some more priming, and that to me is a concern. So at the moment, a little bit more of a correction across the board for a lot of these things, and yes, we're not that positive as to what will occur. Okay, just quickly, let's have a look at the economic calendar for today. And we've got a little bit of data in Australia, home loans, trade balance, investment lending. The main ones there are DOA. Let's see what sort of data we get. Let's look at the refining rates there, and let's look at see whether or not we've got inventory capitulation to this level here. So let's just have a look at it. I don't see this as a major fall, but I see it as more of a correction. That's about it from me. Hope you all have a good day, and we'll talk to you soon.